Welcome to Capital Insights. Today, we're going over how the Federal Reserve is responding to ongoing developments in the stock market, inflation, and interest rate policy. We'll take a look at remarks made by Jerome Powell, chair of the Federal Reserve, from a recent address. Will the Fed intervene during a market crash? Let's kick things off with a key concern. If markets take a steep dive, will the Fed step in? Some investors think the Fed will always act to prevent a meltdown. This idea is often called the Fed put. Powell makes it clear, as long as financial systems are operating properly, there won't be an intervention. Corrections and bear markets won't automatically trigger a Fed response. But if we face a full-fledged crash or serious disruption, then yes, the Fed might be forced to act. Also, a breakdown in the bond market would definitely require Federal Reserve action, which could indirectly stabilize equities too. Upcoming Fed meeting, rate cut or not. Let's talk about the big event coming up. The May 7th Fed meeting. Is a rate cut on the table? Based on this, it seems like the Fed is in wait-and-see mode. They're closely monitoring data and don't appear ready to shift policy just yet. How Fed views the economy in 2025. Powell also discussed the broader outlook, covering employment, trade policy, and inflation expectations. Unemployment could rise, and inflation may accelerate in the near term, especially if trade tensions intensify. Balancing inflation versus employment. If both inflation and joblessness increase, what does the Fed prioritize? The message: today's debt isn't catastrophic. The trajectory is concerning. He urged for timely reforms to keep fiscal health in check before it becomes a major crisis. Let's summarize what we learned. The Fed will not automatically rescue the stock market unless there's system-wide failure. A rate cut in May appears unlikely. Powell foresees economic slowdown and persistent inflation. In crisis mode, the Fed will choose whichever goal, jobs or prices, seems most urgent. And yes, America's debt path is a ticking clock that needs attention. Thanks for watching Capital Insights. If you found this breakdown valuable, hit the like button, subscribe, and leave a comment sharing your thoughts. Stay tuned for more updates on the economy and financial markets. Take care, and see you in the next video.